inflation is a concern being felt all over the world. Wall Street anxiously awaiting tomorrow's CPI, which is expected to have increased 8.8% annually in June. Some people, some economists, some analysts are saying, nope, it's 9%. We'll see. Investors also want to know how companies are managing these higher costs, with second quarter earnings season kicking off. Here for our floor show, JPMorgan Asset Management Chief Global Strategist David Kelly. David, welcome. Good to see you again. Look, the press secretary, Karine Jean-Pierre, said CPI is backwards looking. It's old data. Yeah, is she right considering this breathtaking drop in commodity prices that we've seen in the past 5 or 6 weeks?
Well, I think she is right in general here. I mean, we've had this inflation heat wave. We're going to get one more hot month out of it. Because what happened was commodity prices peaked in early June. Gasoline prices peaked at over $5 a gallon in early June, but since then they've been heading straight down. So I think that we may get 0.9% for the month of June, which is a big, strong number. But I think July, August will be down at 1/10, 2/10. So I think that the heat wave is about to break here, but we get one more really hot report tomorrow.
But even if the heat wave breaks and inflation starts to cool, it's still too high, especially considering those stickier components like rent, for instance.
Well, it is too high, but I think it will come down over time. And I'm much more worried about the Federal Reserve fighting a battle that it's eventually going to win anyway and putting the economy into recession. Because remember, this tremendous drag on the U.S. economy right now. The deficit this year is going to fall by $2 trillion, the biggest percentage decline relative to GDP that we've seen since the demobilization after World War II. That dollar we were talking about here, that's really hurting exports. And of course, we had mortgage rates almost double. That's going to hurt housing. So we've got a lot of things slowing the economy down. That's going to cool inflation down. But I'm more worried about us doing too much and putting us into recession, than inflation not cooling. Inflation will cool.
That's interesting because JPMorgan says a soft landing remains a possibility. But yeah, of course, there's this risk of recession in the back half of this year, perhaps early next year. Nomura came out and said, OK, it's likely happening in the fourth quarter of this year. But then what are the possibility, and they see this happening next September, that we start to see the Fed back off and start cutting rates, starting with 25 basis points?
I think it's quite possible, and indeed that's why they shouldn't go 75 basis points at the end of this month, because what's going to happen is the economy is going to cool down, and I actually want higher rates in the long run. I think it's a very bad idea to have very low rates for a very long time. It distorts everything. But they're never going to be able to get to sustainably high rates if they jump the gun and push rates up too quickly, put the economy into recession. The futures market's saying the same thing as Nomura. The futures market is saying the Federal Reserve is going to have to cut interest rates next year. And at the moment, I tend to agree with that.
Yeah. We were just looking at the major averages. They're all down at session lows for the Dow. But the Nasdaq, once again, is the worst performer. It's down not even 1% today. I don't want to over-dramatize the situation. But again, tech is weak. Can you have any real bounce back in the overall market if you don't have tech bouncing back?
Oh, sure you can. I mean, we had, for example, after the great financial crisis, financial stocks were very low for a long time, but the rest of the market came back up. I think a lot of particularly mega cap tech stocks got too expensive. Yeah. And when interest rates are higher, this is a time when people really think about, well, what is it that I own? And when people think about what is it that I own, I think the stuff that's most expensive tends to get hammered the most. And I think that's what we're seeing here. So there is, it's somewhat healthy, to be honest, that people are really asking themselves questions about valuations here. And I think that's really what's hurting tech.
We're in second quarter earnings season. We started to hear from some companies. The big banks start on Thursday. Do you think analysts are finally catching up to where Wall Street is in discounting so many of these big, hot names with their share prices down sharply? I'm looking at the latest downgrades today. JetBlue, Union Pacific, Lennar. Are the analysts finally playing catch up to the rest of the market?
I think they probably are, but it is a game of catch up. I think one of the things we find in earnings seasons is the dollar is actually very important. And if the dollar goes up very strongly, that pushes down all the value of those overseas earnings. They all come down in dollar terms, and that will hurt the second quarter earnings season. So I think we're going to see some disappointments on revenue and so forth. I think analysts are sort of catching up to this, but I still think that the earnings season may be a little bit disappointing relative to what analysts currently say they expect.
David Kelly, thank you so much for the time.
Anytime.